There are things considered sins in the area of taxation, like tax evasion, and then there are things like tax avoidance, resulting in what is called tax erosion. Erosion is especially by legitimate taxpayers who are in fact compliant but do not actually pay all the taxes due, and yet you can't catch them.
Ever since the global financial crisis of 0809 happened, there's been more focus by almost all countries in the world, to look at structures that may not be considered to be, and I say in quotes, morally acceptable from a tax perspective.
Might the multinationals be stealing from countries they operate, but using legal smart techniques hidden in plain sight?
Even though the money is made in our economies, we are unable to collect the tax on that profit because it's reported as if it is from a low tax jurisdiction.
If you structure your transactions and you plan in such a way that most of your profits or most of your transactions appear not to be in the tax net in Uganda, but in a foreign jurisdiction, especially if you're multinational, and you structure yourself in that way, then you are going to be deemed a tax evader.
And this is the aggressive tax planning that is now being called illicit, even though it may fall within the category of tax avoidance, because it is seen to be aggressive and for the sole purpose of avoiding tax.
Thus, the existence of the International Tax Unit in the URA to try to collect everything that is due from the multinational corporations. Speaking of effective tax administration, that is a must, where widening the tax base is still an uphill undertaking by the tax body. Samuel Setumba, NTV, Business.